as we all know, the markets are in quite a bit of turmoil because of the tariff, what we thought were going to be negotiations, and I still think will be negotiations. But President Trump has taken a very strong line of argument here, and arguing that reciprocity is necessary to create a fair playing field out there. Now, we are all trying to get our heads around how exactly he we know how he calculated his version of reciprocity, but it doesn't seem to make very much sense. And things do feel a bit chaotic out there, and the markets are convulsing as a result. There's a lot of uncertainty. So I've been in Asia for the last couple of weeks, and as I've been going around, and as the intensity of the tariff debate has increased, I've tried to cut through it in a way to say, because I believe this, we know that Trump wants a legacy. President Trump wants to be one of the greatest presidents ever. That's his objective, and he's not going to get there by throwing the economy into a recession and the stock market into a bear market. And we're verging on both of those now. So we're getting close to the line in the sand, where I think his negotiations will kick into gear and will be more productive than what we've heard recently. So that's the bet, and it's logical if we understand who President Trump is. But as I've been going around, I've said not only is that our bet, but we're seeing other reasons for the tide to change here. According to the Atlanta Fed's GDP Now survey, the economy contracted almost 4%, that's real GDP growth, sequentially at an annual rate in the first quarter. That's a big drop. Now, a lot of that could be imports ahead of the tariffs, and surely that is the case. The offset, though, would be a lot of them ending up in inventory, so there could be a lag there. I don't know. I would say that in the second quarter, the likelihood of a negative quarter is increasing here just because of the amount of uncertainty. Well, we know that about 30% of the labor force is probably wondering if it's going to keep its jobs, or the people in the labor force are going to keep their jobs. Federal employees, now that's not the biggest part of government, but there is a trickle-down effect to state and local, and even to quasi-government jobs in the healthcare and education space. And that would account for 30% of the labor force, just wondering, worrying, and probably holding back on purchases until the outcome is clearer. We also have another swath of people, and these are more in the white-collar world, especially middle management, that is seeing middle management layers taken out in many companies. Certainly that's the case in the tech space. And artificial intelligence is part of the reason this is happening. Those left are becoming much more productive. And corporations, many of them, are starting to flatten the hierarchies. We're seeing it in tech, we're seeing it in some financial services companies. That's another swath of the labor force that is probably wondering, what about me? And of course, beyond that, we have uncertainty associated with potential legislation. Tax cuts, when will they be effective? Now, the good thing there is this administration, if it holds to its word, is saying that it will make tax cuts, not the ones tax cuts, any new tax cuts, retroactive either to January 20th, the inauguration, or the date of the legislation. Nonetheless, there is still uncertainty, and it could be that small businesses and other businesses are deferring the recognition of income until they figure out exactly what these tax changes are all about. So we've got a lot of reasons for the velocity of money, and I've talked about this before, the velocity of money to slow down considerably as people and businesses hold back on their spending out of fear of losing jobs or out of anticipation of better tax rates sometime in the future. So a lot of uncertainty, but with 2 down quarters in GDP, we believe that the Trump administration and the Fed are now going to have more degrees of freedom to do what they want in terms of stimulating the economy. Now, the tariffs are certainly not in that category, and we do need clarity there. I know that President Trump wrote The Art of the Deal, and I know that throwing things into chaos is part of striking deals and getting to better outcomes. But I do feel, and the markets do feel, that President Trump might be playing with fire here. And today, China's retaliation, 34% tariff across the board for all U.S. goods, is an indication that might be true. Now, China says that tariff will be effective April 10th. And of course, the tariffs that President Trump has proposed and has decided to put in place, the first will be put in place, the 10% across the board, Saturday, April 5th. The second set, so that's across, I think, 185 countries. A third of those countries will have a second set of tariffs as President Trump tries to veer towards reciprocity. And only he knows exactly what that means given the numbers he threw out there, which were somewhat confusing. So those go into effect April 9th, the day before China's tariffs on the U.S. go into effect. So I think there's going to be some serious negotiation. There already is. We know President Trump has said that he and his team are talking to many, many nations. But you'll notice each time that he does come out and say something about the tariffs, he will quickly follow up with, we're moving into one of the strongest economies with one of the best stock markets, and everyone's going to get wealthy. He'll have to, words are going to start to ring hollow unless these negotiations bear fruit and things settle down on the tariff front. One of the things that I've also been trying to communicate, and I will do this with the slides now, is that we've been in a rolling recession since the Fed started raising rates in 2022. And we'll get into that in a little bit. But if we do end up with 2 back-to-back negative quarters, many investors might fear that, oh no, this is the beginning of a recession, and recessions usually last quite a long time. That's why it's so important to identify what this is. It's actually the end of a rolling recession. Now, what has kept the GDP numbers up in the last few years? High-end consumer and government spending. And both of those are about to change. So we think that we'll have, and in fact they're in the process of changing as I speak. So I think that it will be the end of the rolling recession, and we'll have a clean slate to move into the future with what we believe could be a very strong productivity-driven recovery and then expansion. The technologies around which we've based our research and investing, they've been germinating for 25 years, some of them, and now they're moving into prime time. And when people and businesses are scared, they're willing to change the way they do things. And we think that will accrue to the benefit of robotics, energy storage, AI, blockchain technology, and multi-omic sequencing, and to the convergence among those platforms and the 14 technologies that underlie them. So one of the analogies as we're going through this market turmoil that I'm using, because it does feel very much like this, this is how it felt when we were going into COVID. And you remember there was a month-long deterioration in the stock market, fairly significant, fairly severe. And at the time, we were saying, wait a minute, who's going to solve this problem? It's the innovators. Who's going to sequence this coronavirus? Who's going to use synthetic biology to develop tests so we figure out if we have this coronavirus? Who's going to develop the vaccine? And of course, those companies were in our portfolios. And I feel the same way now. A lot of businesses, a lot of consumers are fearful, and they're going to be looking for better, cheaper, faster, more productive, more creative in terms of products and services. And so we have high hopes that when the new leadership shows itself, and typically if we are in a correction or a bear market, towards the end is when we see new leadership. I remember very clearly in 08-09, the market did not bottom until March of 09, and our strategies started outperforming in November of 08. This is what typically happens as the market looks to the new leaders. We know the Mag 6 had an extended stay, and we think part of that had to do with, their huge cash cushions and strong cash flows, and that's all the market was looking for in a period, especially starting after 08-09. That concentration towards the Mag 6 hit epic proportions recently, and we don't think they'll be the new leadership. Some of them will participate for sure, but we do not believe they'll be the new leadership in this market. And we do believe that if the market broadens out to more and more stocks, then this bull market that we've been in, which we would have considered, with just a few stocks really leading the way, to be not an ideal or not a very healthy market. If we get more stocks participating, then that's a bull market that we will call healthy.